we're at least getting whisperings of, it's significant enough, or the hope is significant enough, that it's made a big boost possible in oil prices. So we'll keep you posted on that. The reaction to all of this from Mark Avallone of Potomac Wealth Advisors. We've got Rebecca Walser as well. Rebecca, on the oil thing and whether it comes to pass that these two countries, Saudi Arabia and Russia, can bury the hatchet and just continue to make money in oil because they both hurt themselves. Where do you think this goes?
Yeah, I mean, I think that's exactly right, Neil. It's really the survival of the fittest when you have prices at this trading at this low per barrel. You know, if we look at the U.S. shale economy, we need a $50 per barrel range to break even because we're so debt laden with all of the shale producers. So we can withstand this for a little bit of time before you're looking at bankruptcies and liquidations on our end. So I think it's absolutely in President Trump's all of our interests to get Saudi Arabia and Russia and OPEC essentially to agree to a production pullback. They can't withstand these prices either. Maybe a little bit longer, but seriously not any time, not a long protraction. We can't take it.
Mark, looking at these markets right now, today notwithstanding, it has this oddity here of rising in the face of stunning jobless claims news, 6.6 million Americans, 10 million over the last 2 weeks that have filed for unemployment benefits, but it's holding up relatively well today. I usually say it's because of the course, good news or bad news on the course of the coronavirus cases we hear. What does it for you? What do you look at to sort of get a gauge of where we're going?
I'm looking at the duration of this and how long this works, and hopefully behind the scenes, all the rumors we hear about vaccines or treatments are going to reduce this duration of this. It's inevitable that I believe that we get out of this, and that's what drives people to still invest. Because I think if you're looking at a 3 to 5 year time horizon, you're going to look back today and say this turned out to be a very good time to invest. So I think money on the sidelines is looking for valuations. We might see them either in technology or communications. The work from home space has been popular. So people are looking for what they perceive as values and bargains if they're a long-term investor, and they may get rewarded for that.
Rick, what are your views on the snapback that the administration wants to see, investors want to see? I don't know if it would be that quick. I could make a very good argument that this is a way overreaction and what's going on and with the number of claims filing, a lot of that will be reversed. But I do feel that a lot of people are going to be a little gun shy about going to crowded venues, whether that's at restaurants or theaters or even, convention centers and stadiums. And I don't know if we're going to see that or the snapback, whatever you want to call it. It'll happen, but it won't be immediate. What are your thoughts?
I agree with Mark. The thing is, Neil, we wouldn't close down the entire U.S. economy if we were just going to have 200,000 cases of the flu. So what we need to get is a medical protocol that eliminates the death. And once people realize, hey, if I go out and live my normal life, I might get a flu or I might get a little bit of a cold that I have to deal with medically, but I'm not going to die, then I do think we will have a return to normalcy. I do think we'll have gun shyness, absolutely, of course. And certainly businesses, that have furloughed a lot of people, are they going to go back and fully staff up? It's going to be a little bit of a slow process, and we're going to have to see, right? But I do see that once we have whatever is going to happen this month to kind of understand the mortality rate and the medical protocols, we are going to have a tremendous, wonderful sort of, okay, I can't tell you when, but it's going to say we're going to see light at the end of this tunnel. I promise you, we need some hope here, and we've got to have this economy ready to go because we are going to get some hopeful news. We are going to see some wonderful things happen. I know it's going to happen, and I'm counting on it. I have the faith for it, and we just have to be prepared as American people. Once we know we're not going to die if we go out, then let's go back to those restaurants, those theaters. Let's go watch our sports teams. Let's do this all again.
That's very well said. Once you know you're not going to die. That's a very good point. What do you think of that, Mark?
Well, I think economically it will be rocky for weeks and months. These things are going to take a long time to unwind. It's not just, are we going to be comfortable sitting in a restaurant? I was a corporate banker for a number of years, and I can tell you right now that new business development has stopped at every bank in the country. It's sort of going along like triage. They're looking at protecting from loan losses. They're building workout shops, and they're either accommodating creditor requests, they're reviewing collateral which is impaired, and they're realizing that they're not going to collect interest for a few months. You couple that with how the stock market has impacted the asset management fees of banks, that M&A activity has slowed, and and this flat yield curve, which was already hurting banks, you're not going to have a robust, immediate economic turnaround. I do believe it will happen, but for anybody who thinks that it's going to be 2 or 3 months, I say we need to really look at 2 or 3 years as a more realistic opportunity to turn this giant ship around, because banks are going to be mired in trouble, and they are the economic engine and lifeblood for financial recovery.
2 or 3 years?
Well, to reach where we were, to get back to close to 30,000 on the Dow, I don't see that happening in 12 months. I could see another 20% bump, and that's why you keep people invested in this. We had 20% bump last week. So that can happen again, but that's only going to take us to 26,000. So if you're still going to be another 20%, the way the math works, on the way down is a lot more benign. You need a bigger percentage gain to make up for what was almost a 30% hit. And then this last week, we were down 6%. So we're going to see more of that. And before we get back to Dow 30,000, you're going to have to look at a period of years and not just months.
All right, we shall see. Guys, I want to thank you both very, very much. Some news on Amazon.